Top 7 trading mistakes beginners make and how to avoid them. Ever felt like you're throwing money into a black hole when you trade? You're not alone. Many beginners make the same costly mistakes. This video will reveal the top 7 trading blunders and, more importantly, how to avoid them. Imagine this. You see your stock plummeting, panic sets in, and you sell at a loss. Then it bounces right back up. Sound familiar? Emotional trading is the #1 account killer. Fear and greed cloud your judgment, turning trading into gambling. To avoid this, stick to your plan. Set stop losses to limit potential losses and practice patience. Remember, trading is a marathon, not a sprint. Picture this. Everyone's hyping up a new crypto, promising it's going to the moon. You jump in, only to see it crash and burn. Chasing trends based on hype is a recipe for disaster. You end up buying high and selling low, the opposite of what you want. Instead, do your own research. Have a solid trading plan and don't let social media hype dictate your decisions. There will always be another opportunity. Imagine holding onto a losing trade, desperately hoping it will bounce back. Days turn into weeks and your losses keep mounting. Failing to set a stop loss is like driving without a seatbelt. It leaves you vulnerable to significant financial damage. Always set a stop loss order. It's your safety net, automatically selling your position if it reaches a certain price, limiting your losses. Imagine buying a stock without realizing a major economic announcement is about to drop. The news hits, and your stock tanks. News and economic events can significantly impact the markets. Ignoring them is like navigating a ship without a compass. Stay informed about upcoming events like interest rate decisions, inflation reports, and company earnings. Understand how these events might affect your trades. Imagine constantly buying and selling, racking up commission fees with every transaction. You're always in the market, but your profits are dwindling. Overtrading eats into your profits with commissions and increases the likelihood of making mistakes. It's often driven by boredom or the need to do something. Trade less frequently. Focus on quality trades, not quantity. Be patient and wait for the right opportunities to present themselves. Imagine taking trading advice from a self-proclaimed guru on social media. Their tips turn out to be terrible, and you lose money. Influencers often have their own agendas, whether it's promoting a specific stock or selling a course. Blindly trusting them can be dangerous. Do your own research. Verify information from multiple sources. Don't blindly trust anyone, even if they seem knowledgeable. Imagine trying to build a house without blueprints. It would be chaotic and likely to collapse. Trading without a plan is the same. A trading plan provides structure, discipline, and a roadmap for your trading activities. Without it, you're essentially gambling. Create a trading plan that outlines your goals, risk tolerance, trading strategies, and entry/exit criteria. This will help you stay focused and make informed decisions. So, there you have it. The top 7 trading mistakes beginners make. From emotional trading to lacking a plan, these errors can be costly. Which of these mistakes have you made? Let us know in the comments below. We're all learning together. If you found this video helpful, give it a like and subscribe to our channel for more trading tips and strategies. And be sure to check out our next video, where we'll dive deep into building a winning trading plan. Hit that notification bell so you don't miss it.